Welcome to the India Fintech Diaries, the only podcast focused exclusively on the Indian fintech market. I'm Elroy.
And I'm Hemant. In each episode, we dive into the latest trends, ideas, innovations, business models, and personalities that are shaping India's fintech landscape.
We also invite amazing guests who are innovators and industry players that are driving the change that is helping make financial services more modern, innovative, and inclusive in India. Come join us as we explore the changing landscape of fintech in India. Hey everyone, welcome back to India Fintech Diaries, the show where we discuss all things Indian fintech. It's great to be back with another episode covering WealthTech and some of the innovative work that Indian fintech firms are doing in this space. Today, to take us further in this exploration of WealthTech in India, we have with us Aditya Agarwal, CEO and co-founder of Wealthy. Welcome to India Fintech Diaries, Aditya.
Thank you, Elroy. Pleasure to be here.
Aditya, it's great to have you on the show. First of all, congrats on your recent Series A fundraise. That must have been a great milestone for you and Wealthy. But before we get started and discuss Wealthy, talk to us a little bit about yourself.
Sure, Elroy. I'm originally from Udaipur, a small town in Rajasthan. My father is a small entrepreneur, is a micro entrepreneur in Rajasthan.
Okay.
And as far as I remember, my conscious self, I always wanted to be an entrepreneur. And for some reason, I was since I was good at studies, I ended up being becoming an engineer, and I did my engineering from IIT Bombay. But even while I
Okay.
was there, only thing that sort of, if you can call that a dream, like my dream was always to be an entrepreneur and hopefully create some value for country, for people who work with us, and hopefully for myself. So I think that is something that I was always very keen on, even as an engineer while I was finishing my engineering. Post finishing my engineering, I worked for a large consulting firm for a few years, where we would work with large corporates and help them become larger through strategy, growth, or redesign kind of initiatives. And the reason why I chose consulting as a career was that I thought that it would give me a good ringside view of how boardrooms make decisions, how
Yeah.
business leaders make decisions, and how you run businesses at scale. And Yeah, and that was, at some point, I was at the crossroads of a career where I had to either go and get an MBA from an Ivy League or start pursuing my dream of entrepreneurship. So I chose the latter. And my first step into the world of entrepreneurship was actually with my father in his business, where we in Rajasthan we sell, or we trade rather, into building materials, especially marble, granite, and likes of those. And it was a business that was struggling because it's a business that's been commoditized over time.
Yeah.
For some reason, I thought that would be the right place for me to start my entrepreneurship career. I ended up spending 4 years there. We did a lot of new things, which I'm still very proud of at back home. And still, even when I go back, a lot of people in the market today still talk about that. This firm was called Rashri Marbles, that Rashri tried to do some new stuff, and ended up almost succeeding there as well. After 4 years, I left home again because I thought, now I'm ready to go into the real world and build something which is technology enabled. That is also when I invested all the savings that I had into tech startups, some of which worked out, some of which didn't, but sort of got to learn a lot. And I think at some point, I said to myself, and that was again out of an insight that I usually would hear from my friends often, right, who are especially in sort of regular income jobs, that they're not sure what to do with their savings. Uh,
Yeah. Pretty much everyone has the same
yeah,
problem. Yeah.
exactly. And I sort of started helping some of my friends think through that, and I realized that, yeah, it's fun. It would be a good thing to build something here, and I was enjoying that as even as a hobby for my friends. So that's how I ended up coming to the space of wealth management. And during that time, Prashant, who's my co-founder, both of us know each other for almost 15 years. So he was pursuing wealth management as a profession because after his engineering, he did his MBA from IIM Ahmedabad and was with Morgan Stanley in London for many years. And when I spoke to him about this as a problem, he sort of immediately connected to it, and he said that I would love to build this with you. And I said yes. I mean, that sounds like a great idea. So that's how we ended up coming together to start Wealthy. And yeah, it's been a fun few years of our own ups and downs, but it's every day has been super fun so far.
That's pretty interesting, Aditya. Aditya, India has seen a large increase in investing in the last few years. So, if you look at the statistics, for example, the number of demat accounts has almost doubled from about 36 million in 2019 to about 74 million in 2021. I think we've also seen similar increases in mutual fund investors, with India now having about 27 million mutual fund investors as well. But I think, in spite of this renewed interest in the public market investing that we have seen, right, quality financial advice and guidance in building wealth for people who are looking to invest and building a good investment portfolio still remains scarce. So, SEBI, for example, only reported about maybe 1,300 odd registered investment advisors, which is actually in very poor ratio of almost one advisor for every maybe 76, 80,000 investors. Even if you add bank relationship managers, etc., to the mix, that ratio does not improve significantly. What do you think some of the structural reasons might be for this kind of skewed ratio and challenges that might be there?
Right. I think so. One, let's just step back a bit and look at
Yeah,
how much money are we investing. So just to give you a number, Indians today save $500 billion a year. Okay, that's
yeah,
the savings that we do every year as households. And if you look at net investing into equity in last 1 year, when markets were at their peak and number of demat accounts were at a rise, three it was about $3.5 billion, right. So that's about one
right,
and a half percent of what we save annually, right. So we are still in very, very early stages of the transition of us from savers to investors, right? And I think, as you
right.
rightly said, one key input that we feel missing and that we have seen, experienced ourselves missing, is what you rightly said, is quality financial advice, right? That is something that is missing from current ecosystem, and that is essential for more of this money, because ultimately everybody today has understood that my savings have to grow faster, but they just don't know how, right?
Correct.
While I can watch some YouTube videos, I can look at some names, ultimately I end up participating with very small wallet share of my total savings, right? And that ends up, and even those decisions, if I don't take correctly, then that don't give me, that doesn't give me confidence to sort of participate with a higher wallet share, 6 months from now or 12 months from now.
Yeah, and there's also a matter of discipline, also being a disciplined investor and being consistent in it.
Correctly. So there is, a lot of behavior control that I need to do as an individual if I'm, putting my money, which is outside of fixed deposits, right? So,
Yeah,
but to be able to solve for that, what is really missing is quality financial advice. Because if you compare, let's say, even US, I think US, even though US, even if you're a class 8 student, like, compare equivalent to class 8 student here, they start learning about stock markets, at that age, right? They start
hmm,
understanding equity as an asset class. They start understanding the need for growing their money at a rate which is faster than inflation when they are so young. And in our country, we don't have that conversation, right?
yeah,
So as long as that conversation is not happening, we continue to rely, the gap continues to remain on the side of high quality financial advice, right? And I think the challenge, of course, in terms of the number that you mentioned, SEBI's, that essentially is a question of business model, right? That
correct.
one particular business model probably doesn't seem, like that business model doesn't seem to be working, right? That's why you don't see that sort of, number increasing. But if you look at any developed markets also, right? So right now there are two kinds of fee models that an advisor can pursue. One model is a fee based, which they earn from the investor, and the other
Correct.
model is a commission model, which they sort of earn from the manufacturer, right? And skew in India still remain towards the commission model, because as a country, we are not yet there where we are moving money out of FD. Now asking someone to actually pay for me to move money out of FD, that is actually, that's like,
Becomes a much harder sell.
yeah, that behavior change is
Yeah,
very difficult, right? So I think that is the reason why you see lesser number of fee only advisors. In fact, even if you look at an ultra HNI market, right, a lot of
yeah,
financial advisors sort of surrendered their fee based business model licenses, because that is something that the country's savers are not yet ready, right? Very few percentage. So that's, so in terms of RIA growth, that's essentially the challenge why that number is not growing, right? But on the other hand, you have a lot of people today who are engaged
yeah,
in some sort of financial services activity in the market, right? Because ultimately India is a country of entrepreneurs, right?
right.
And this is a lucrative profession because you don't need to make any investment, right? As an individual.
Correct.
right? You just need to be able to earn trust of people and be able to sort of get them to do things which they have never done, so give them better returns or give them better ideas on what they can do with their money, right? So there are a lot of
Yeah.
such people. They could be just distributing FDs right now, they could be just distributing insurance right now, they could be just distributing mutual funds right now, right? So there's a very large
Yeah.
ecosystem of those people. And what is happening today, the change that is happening, and that apart, and we hope to also play a big part in that change, is that even if you go to today, let's say an FD agent, which has only been doing FDs for his or her clients, they have realized that clients today want more, right? And
Yeah.
that's pushing that FD advisor to also, sort of learn about other products, how he can help his or her client better. So I think what essentially we are betting on is the idea that similar goes for bank relationship managers. If you speak to any bank relationship manager today, in fact, then there are articles published as well on that problem. We have more than 500K active
Yeah.
relationship managers in India, bank relationship managers. A lot of them are not happy with what they are doing, right? Because they've been on a
Mm.
treadmill of 996 and then moving from one bank to another and then
Correct.
doing things for the clients which are pushed down by the bank, but they might not really want to do because they have aggressive revenue targets to meet, right? And sort of pandemic has forced some of these people to think, yeah, that what am I doing with my life? Is this
Right.
something I want to do for the rest of my life, or I want to start working for myself and for my clients, right?
Yeah.
So I think the bet that we are taking is that two things. One, of course, the model could be commission based or fee based. That is a choice of the individual advisor and also the client, right? Some clients may prefer a fee based model, some clients. So that you can't sort of force a particular model down anyone's sort of throat, whether it's an advisor
Yeah.
or client, right? So that let the market evolve there. But I think the second bet that we are taking is that there's already an ecosystem of people who are having conversations about money with
Correct.
middle class at large, right? And today, because of internet, because of video technology, because of everything else that has happened in last 2 years, the ground has actually shifted where you can today create a distributed workforce which is very well trained, which is very well priced of all different how to really manage money. And there is and there is interest amongst those people because they are also seeing that they are losing out on clients if they are not able to upgrade themselves and offer more products to their clients, right?
Mm.
So essentially
Right.
the bet that we are taking is that, let's say we need 1 million new wealth managers or financial advisors in this country. That 1 million can actually come out of the existing pool that is already out there, right?
Yeah.
And there are enough people today who are ready to get themselves upskilled. And today, because of technology, you can actually upskill people, you can give them a platform, and all of that you can do it in a very low cost environment, right?
Mm.
Compared to
Right.
what, let's say, for example, if an LIC. So today we obviously don't talk about LIC anymore, but LIC, when it sort of started its first savings products, it was an interesting innovation for Indian savers because Indian savers until then didn't really have much else, right? And they were able
Yeah.
to really use the independent advisor network to really go deep into India and give people an option to do something rather than just keeping cash under their pillow, right?
Correct.
So to that extent, and obviously LIC took 50, 60, 70, 80 years to get to, let's say, a couple of million people who are sort of talking about their products, right? But today all of that you can do much faster, right?
Yeah.
You can upskill people with content, you can upskill people with quizzes, you can upskill people with I think essentially what we are saying is that if you have to leverage AI, you rather leverage AI to upskill the existing workforce and make them first of all understand the value
Yeah.
prop, the advantage of becoming a holistic wealth manager and holistic financial advisor, but at the same time leverage technology to really do it at scale, right?
Yeah.
Rather than leveraging AI to sort of build algorithms which end clients try and use to manage their money, because that is going to take a long time for that behavior shift to happen. And maybe it will never happen because 99% people want to do their work 5 days a week or 6 days a week, and then Sunday they want to sort of buy groceries or spend time with their family, right? So
Right.
it's unreasonable to expect that 99% of people will actually be able to sort of the end consumers would actually be able to spend time to start learning enough and to be able to leverage sort of, let's say, an algorithm to manage their money. right? But you would rather, I think the
Yeah.
bet that we are taking is that you will rather invest all that effort into technology, upskilling AI on the supply side, and scale existing ecosystem and upskill existing ecosystem to make them a complete wealth manager or complete financial advisor. And after that, the model is
Hmm.
up to an individual's choice and a client's choice, whether the client wants a fee based model, or if the client is comfortable with commission based model. That is completely up to the client and advisor.
So, Aditya, thanks for that fairly detailed description of what the current state of the market is and some of the key factors in that market that led you to found Wealthy. I also want to talk about another key aspect that I've seen personally, right? So, when I first started investing, first, number one, it was difficult for me to invest directly without the investor or relationship manager. I'm talking about like 15 odd years back.
Got
And
it.
even after you invested with using one of these financial advisors or relationship managers to invest in mutual funds, the only way you could track your investments that time would have been to paper statements.
Right.
So you had to meticulously keep a track of those paper statements. And let's say tomorrow you switched your financial advisor for some reason, right? It would be very cumbersome for the new guy to even figure out what you'd invested in if you didn't keep records. And also, most financial advisors themselves will not be able to construct a picture of what their existing clients have invested in at that point. So at Wealthy, I believe you're solving some of these issues and a lot more. So can you talk me through maybe what the platform provides to a financial advisor and some of the other key aspects of the platform?
Got it. No, I think that's a great point. Today, for an advisor, we can solve for multiple needs. So the first one, of course, is giving them tools so they can advise better,
Yeah,
right? Second, that we able to solve for them is that we today have 242 financial products
yeah,
available on the platform for an advisor, which range from pre-designed strategies in funds to, let's say, a FD which is offering a better than bank interest, to
right.
something complicated like a private equity product,
Yeah,
right? So that's the kind of range that an advisor today can engage with for their clients, and execute, not just execute them digitally, but also show them a picture that how does all of this fit together and give their portfolio a right kind of diversification that is right for them, and give them the
right.
kind of returns that they're looking for, right? So that's number two. And number three, of course, is reporting on a regular basis, being able for them, advisors for them being able to manage their client relationships, like simple things, for example, birthday, right?
Yeah,
Being able to sort of wish people on their birthdays, to even complicated stuff, like for example, markets have been on a downtrend, right? So how do
right.
I reassure my investors with a communication that is essentially institutionalized, right? But at the same time, it sort of looks very personal, right?
Yeah,
Those are some of the other things that we are able to leverage. Advisors are able to leverage platform for. And finally, being able to manage their business. So how much have they earned so far this month? What was their original plan? How many clients have done fresh transaction? How many clients have? So all the analytics and managing their payouts, their earnings on
right.
the platform. So that's on the advisor side. On the client side, of course, I think if you look at on the client side, then there are three aspects of a relationship, right? The first is advice, right? Second is
Yeah,
advice includes both when you're getting in, plus ongoing advice of controlling behavior, right?
correct.
Second aspect is execution of products, or execution of say a purchase, and third, of course, is reporting, right? So all of
Yeah,
these three, of course, in advice, a lot of it is as an interaction between the advisor
yeah,
and the client, but the other two parts are completely automated, and clients also have a client interface to manage their money with. So for example, if let's say I'm your advisor, but for some reason I'm
hmm,
not available for this week, so you don't need to depend on me to execute something, or let's say withdraw something. So money at all points in time, money is in your control. All your money is in your control completely. You can analyze, you can
yeah.
look at reports, you can withdraw, you can take actions. All of that you can do on your own as well, right? So that's really, so in a sense, it's basically a complete platform for both advisors and clients to manage the relationship. At the same time, they can continue to do things on their own if they want to.
Aditya, I also saw on your website that today you have like over 3,000 plus well partners on the platform, and
Correct.
the platform manages over, I think, INR 33 billion on the platform already.
Right. Right.
So, talk to us a little bit about the traction you're seeing for the platform.
Yeah. To be honest, we have, and by the way, all of this has come after spending about just maybe 40 lakhs on total
Hmm.
marketing, which we did last year. In fact, that was one of the reasons, because we wanted to get to a place where we are very confident about how the business is a proposition right for both consumers and advisors, and are we able to sort of build a business model which sort of makes money on top of it, right? And once we're
Right.
confident, that is when we sort of raised money to sort of scale up our approach, right? So last 2 years have been amazing for us. We've gone literally from zero to sort of where we are in last 2 years. It's a journey that we did in last 2 years, and I'll talk to you about our journey before that as well. But last 2 years we've even if I look at our real revenue, monthly revenue, we've grown almost 20x, right?
Yep.
from the
That's
seed
phenomenal.
from the seed capital that we had raised in October 2019, which was about $1.3 million, right? So yeah, I think, but more importantly, we have very high NPS scores on both sides, advisor as well as client side, and which was extremely important for us before we said that let's start scaling. Second thing, I think in terms of platform today, as I said, we have 242 plus financial products available, which range from predefined mutual fund strategies to insurances to FDs to equity products to private equity kind of stuff as well, right? Platform has really come a long way in last 2 years in terms of the depth and breadth of products available to an advisor and a client to execute, right? And I think this year we are now the capital that we have raised is to grow 10x in this year, and on real revenue again. And yeah, I mean, I think in terms of team, we have done exceedingly well. We have and that is actually very interesting. I think that's something we probably should do another podcast on it. But we are seeing very senior bank leaders, very senior wealth leaders from the traditional industry wanting to switch sides, right? And we've
That's
already
interesting.
and we will announce some of those hires, but we've already had a couple of very senior folks from very well reputed private banks sort of move and sort of build India's leading wealth platform, right? And which essentially can solve for 99% of India, not just the top 1% rich of India.
That actually brings me to the next question I had, Aditya. I'm curious about what's the customer profile of your customers? What does a typical well partner look like, for example?
Yeah, so a typical wealth partner would look like someone who has quit his banking job, or so we have three different types of people, but one of them is people who have quit their banking jobs and are starting out as an entrepreneur. The second profile that we are seeing, as I said to you earlier, so that there are a lot of people out there today
Yeah.
who already are engaged in some sort of entrepreneurial activity in the field of personal finance, right? And these guys sort of get access to more products, technology free of cost, and we also help them in their marketing efforts, right? And the
Yeah.
third category of people, cohort of people, is very interesting. Again, these are people who are accountants, who are friendly, sort of software engineers also, but have been sort of casually helping their friends, right? And now they're saying that, okay, let me make my hobby a profession to an extent, which is what I did as well as a founder, right?
Hmm.
In terms of wealth
Yeah.
partners, that's the kind of profile we are seeing. And in terms of consumers, I think what we are seeing definitely is that most of our advisors work with clients who are talking about a large, like the savings are a reasonably large pot, right? So these are not,
Okay.
and also clients are at a life stage where they are very serious about the money decisions they make. So, for example, 80% or 82% of the client base that our advisor partners or wealth partners bring to the platform are greater than 30 years old, right?
Okay.
Which is sort of very different from, let's say, an investing app.
Yeah.
So I think that's what we're seeing. And there we are seeing sort of concentration around 35 to 45 years of age, where we're seeing some concentration there on the client side. But then after that, there is a long tail of people who are near to retired or retiring. And there is also people who are sort of millennials but earning decent money, right? So that's really in terms of client profile, that's what we're seeing. And geographically, like our first set of well partners were from Bangalore. So we were, but after that, now we have, I think 80 plus cities where well partners are working with us from. So whether it is small city like Sholapur or, you know,
I'm curious, Aditya, have you seen more traction in smaller cities, non-metro cities, as opposed to just the metros?
I think not really. And in fact, that's what probably excites us the most and about what we're doing here, because we are seeing people who have, because not every 35-year-old would have a lot of money. There are 35-year-olds
Correct.
who want to do 10,000 rupees a month kind of investment. So we are seeing a breadth of, clients who are doing 10,000 rupees a month, but which is serious money for them. At the same time, we're also seeing clients who are taking, 5-10 crore kind of decisions on the platform with us, right? So I would say it really depends on the network of a wealth partner that we bring on board, right? And less so on whether we are whether there's a tier 2 is better for us, because tier 2, like, there are some pockets that, for example, Raipur we are doing really well, Odisha we are doing really well, but all of those pockets where we're doing, like, where which are outperforming are driven by the network of wealth partners that come on board.
I think the other question that I would have, and pretty much all the listeners would also be interested in, is how does a platform like Wealthy make money? Do you charge any fees to the wealth partners? Talk a little to us about the business model as well.
Yeah, I think right now the business model that we have chosen, going back to what we had spoken about,
Yeah,
the structure of the market right now, we have chosen the model of earning a commission on the products that are placed, right?
yeah.
And then that is sort of split between wealth partner and us, right? So for example, if it's, let's say, an equity product, maybe it earns us 0.7%, right? So part of it will be split partner and the rest will be retained by us. So that's how we generate revenue.
And Aditya, talk to us a little bit about a roadmap. How do you see Wealthy evolving over the next couple of years? And in general, how do you also see the industry evolving over the next 5 years, for example?
Yeah, I think let me answer the industry first,
Yeah.
right? So I think industry, I think a couple of things. One is definitely, some banks will lose out on this whole shift of money moving out of bank deposits or real estate or gold into, new age financial products, right? That is something that is going to happen. Second thing, I think structurally we'll see a lot of employees who are currently working with end clients, either as a bank employee or even as a sort of employee of, let's say, a large wealth manager. A lot of these people will go independent,
Hmm.
right? Because I think that's a trend that is anyway happening across the world, right? That there is a gig economy, creator economy on the rise, and part of that is because it is becoming easier and easier to set up business, right? And players like us are here to help them, and being independent also gives them a chance to offer a client, something that cannot offer if they're part of a large organization, right? Because then they're constrained. They are no longer constrained in terms of their intent to do the thing for the client, and in terms of ability, platforms like us will be able to help them compete with any large outfit. And obviously, if you look at private banks, even today we can sort of compare to proposition, any client would say that our proposition is much better than, let's say, a bank that they're currently banking with.
I think this has been a very fascinating conversation for me, Aditya. It's been great conversing with you. If our listeners wanted to know more about Wealthy and get in touch with you, what's the best way to do this?
Listeners can reach out to me directly. I'm on Aditya at wealthy.in, or they can, if people are wanting to work with us, they can visit wealthy.in/careers. But yeah, I make myself available on email, and I'm always looking forward to interact with folks who might have an opinion or might not have any opinion about what we're trying to do, right? So I'll repeat myself. I'm available on Aditya, Aditya at the rate wealthy.in, and your listeners can reach out to me by just shooting an email.
Excellent, Aditya. We'll include those details in our show notes so people have that as a ready reference. Thanks a ton, Aditya, for taking the time out to speak with us today.
Thank you, Elroy. It's been fun, and all the best for what you're doing for fintech ecosystem.
Thanks again, Aditya. That's it for India FinTech Diaries for this week. Do log on to our website, indiafintechdiaries.com, for exclusive content. Until next time, stay safe.